Hey traders, Raghee here. On Friday, we put out a video called December Game Plan is to Buy, right? So pretty straightforward, yes? I want to be a buyer in December. While there are three different phenomena, actually four, I'm going to introduce a fourth phenomena we can prepare for. So first of all, window dressing. It's probably the easiest thing to use to our advantage in the month of December, which is the idea that strength gets stronger. Strength is defined by two things. Is the symbol above the first trading day of the year open? In other words, is it positive on the year? And the other part of that is it above the 200? And nothing shows that quite as good as the NASDAQ does, right? But hard to count the S&P out. NASDAQ is punched up to higher highs. S&P is teetering right on them, but both of them are well above the 200 exponential moving average, and both of them are above their first trading day of the year. Hence, they're up on the year. They're positive on the year. Even the Dow has managed to do the same, right? I mean, you take a look at the Dow, you think, whoa, Dow is punching up to higher highs? How is this happening? So that's the next layer of this. What do we want to buy? Yeah, buying dips on the Dow, buying dips on the NASDAQ, and buying dips on the S&P are fine. NASDAQ would be my preference. So when I'm taking a look at something like the NASDAQ, I'm looking at it from the perspective of there's very few money managers out there. There's very few people who manage client money that aren't going to want to show their clients, look, I've got you in tech. So then which tech, right? Which ones? So if we break the NASDAQ down to its first most important sector, it's XLK. And XLK, and I'm showing you, I know it's kind of a squashed up looking view, but it is a view that shows you where are we in terms of that first trading day of the year, the very beginning part of the year. And there's XLK. Well, XLK is the main cylinder, if you will, in the engine called the NASDAQ. The main stocks in the XLK are Apple and Microsoft. Now, Apple had a tough go. You take a look at Apple through September, October, Apple's come back in late November into December, and it's back into an uptrend. And this is going to clearly help XLK outperform. Microsoft is absolutely in fuego, right? You talk about and by the way, window dressing is going to benefit those stocks like Microsoft, like Apple, stocks weighted within the NASDAQ the most. But would it surprise anyone to know that the number one performing sector right now is the SMH? SMH then means stocks like NVIDIA, AMD. There's a number of names that are on the list that are in uptrends, that are positive on the year. Intel, AMD, Oracle, NVIDIA. These are all strong names within the SMH. And then if you think about index sector stock, NASDAQ to SMH to any one of these individual names, right? So now you might say, okay, Rog, we're getting a growing list of things. So what do I do to set this up? It's one of two things. One, either buy the mean reversion to the 34 EMA wave, or just surf the daily price movement range. If you're looking for a way to capitalize on volatility, there is frankly no better way than to actually use a zone that is designed by looking at 6 months of typical price movement range relative to the day. When I look at the daily price movement range, I'm looking at 6 months of Tuesdays. I'm looking at 6 months of Wednesdays. I'm looking at the typical volatility range that NVIDIA has basically traded within for 6 months relative to the day. Does anyone think that Mondays are always going to behave like Tuesdays and Tuesdays like Wednesdays, or Fridays where we have things like non-farm, right? Think about certain days of the week where they tend to be when we have Fed meetings, non-farm payroll, right? They land on the same day. So looking at volatility based on, hey, this is what we typically see on Fridays is much more effective than a cumulative look at volume saying, hey, what have we seen in the last 7 or 14 sessions? That's the difference, really, if you will, between the price movement range, a PMR, and say the average true range, an ATR. It's how the data is curated. Yes? All right, I mentioned another factor, one that we haven't talked a lot about. Is it too early to start talking about earnings? Well, for those of you that follow the 642 window, something we put out there for a few years, if you're curious about that process, I've explained it in detail over at countdowntrader.com. It's something we're going to start implementing in the Sector Secrets Mastery as well. In fact, today was the first day we kicked off our earnings discussion. What's on the list? How are we going to trade it? What the window is? And I'll give you an example. Earnings largely kicks off with the first group of financials, and that's coming out on the 12th of January. That's going to be here before we know it. If you're a buyer of options like me, if your preferred way of trading earnings is, hey, let's take advantage of the movement into the event, as opposed to the very binary up or down moves on the release. Now, if you're looking to trade the release, I'm not your trader. But if you're looking to trade the psychology leading into the release, that's what I do. That's what I find to be far easier and less volatile and less risky an approach. I love the approach of, hey, how can we take advantage of earnings without having to hold through earnings? That conversation starts now. And the very names that are in uptrends due to window dressing, being up on the year, being in the green trends, these are going to be some of the same candidates for earnings. So JP Morgan would be on the list. Hey, Microsoft's earnings are on the 31st of January, gang. So not only is Microsoft a great buy the dip candidate, right? Earnings are on the 31st. So yes, they're about 8 weeks away. I'd rather start taking a look at Microsoft with a lens for earnings and likely that February expiration, that February 16 expiration, closer to the middle or end of this month. But nonetheless, it's in play. So you might say, okay, Rog, how would that work? Right? Do we have index sector stock? Well, let's start at the top of the list. Let's start at the top of the food chain. The NQ is in an uptrend. I would want to buy NQ when it dips into the daily price movement range, and I would especially love that in conjunction with, at this point in time, non-farm payroll. By the way, anyone who woke up this morning thinking the NASDAQ was going to continue lower, rude awakening. And why? It was probably a level that you weren't aware was sitting there, and that was the daily price movement range. S&P did something similar. So while this is a very volatile move, hit the first standard deviation, right there, hit that first standard deviation of the daily price movement range. But I don't want to be a short seller when price is in that gray zone. I don't necessarily want to be a buyer either, but I won't be a short seller. Let me show you what the S&P looked like with that same zone using historical volatility right there. There's your wick. So if you're waking up thinking, oh, we're going to head lower, remember two things. We rebounded in the S&P and the NASDAQ pretty strongly into the close and out of the daily price movement range, right? So now let's map that to, for example, Microsoft. How do you buy Microsoft? Well, it's really simple. And the day that you buy it makes a big difference. Okay. Exhaustion trading is waiting for price to either reach a mean reversion, that's my wave, or a volatility support level, that's my daily price movement range. And that would have been this candle right here, which was Monday, right? The candle today, Tuesday, is the up candle. Today's candle is a follow through from that zone. So I don't want to be buying with the move higher. Clearly it's valid to be a bull. Green multi-trend, green candle dipping into the gray zone. This is like Garanimals, gang. Just match up the colors. How does that work? Uptrend, gray zone is support, bullish candle, which is a green candle, dips into that zone of support, and then we look for follow through, right? And whether it's a 5-minute time frame in the hourly price movement ranges, or it's a daily time frame in a daily price movement range, this is the kind of thing we're looking for. Where else? What other symbols are really strong as we go into the end of the year? Let's go take a look at Meta. Right? It's gone yellow. Do I like Meta as much as when it was green? I do not. Right? Prioritize the green trends. Google, sure, it's in the daily price movement range, but pass. So I saw Apple. Apple's in an uptrend. Buy the daily price movement range. Microsoft's in an uptrend. Buy the daily price movement range. What about consumer discretionary, and that brings us to Amazon. Amazon had a wild day, but nonetheless, green trend, by the daily price movement range, right? What else do we have? After Amazon within consumer discretionary, we have Tesla. Is Tesla in a trend? No, Tesla is probably the most unmagnificent of the Magnificent Seven. However, daily price movement range are still going to work, right? But I'm going to prefer a green trend over a yellow, which is why I prefer, say, Apple and Microsoft and Amazon over, say, Meta, Google, Tesla, right? So prioritize those trades that have the ability to punch up to higher highs. Notice that Tesla is struggling with higher highs, yellow trend, and Microsoft is not. Now, what if you had that level of real-time, very objective information to say, gosh, there's probably a pretty good chance that Microsoft's going to continue to climb out of that daily price movement range with a path of least resistance, quite literally because of the green trend, right? So these are things that we're going to continue to look for. I love the look of financials right now. Look at financials, green trend. That's going to benefit JP Morgan, right? Look at the trends here, Wells Fargo. And by the way, this is why the S&P is appealing right now, because we have XLK strength and XLF. I know I've mentioned it a lot, but gang, it's December now. Now it's time to start getting those buy the dip plans to work. This is where I'm going to continue to focus on buy the dip. Hope that helps. If you have any questions, leave them below, and I'll see you in the next update.